The president has been known to criticize not just Iran and the oil markets and OPEC, but also the Federal Reserve. He does not want to see them hike rates. Too bad. The Fed has initially and officially started its two-day meeting, and we are less than 24 hours away from the Federal Reserve announcing its decision on whether to raise rates. Right now, 100% probability. That's what the Fed funds futures pits are showing. These are the guys who bet on this for a rate hike tomorrow. Looking ahead to December, that's climbing too. 80% chance of another rate hike. So that would make 4 for the year. What will the traders be listening for tomorrow? If we think already, guys, that there's going to be a rate hike, you're going to be listening to the statement from the chief, Jay Powell. Let me hear from you right now what you think. And John Corpina, give it to me first. What will you be scrutinizing in that statement?
It's just going to be outlook moving forward. If you have this conversation a month ago, we would have focused more on December and what they're really going to look for and blueprint for the end of this year. I think we're looking for more clues for 2019. The Fed has always said they're going to remain data dependent. Data has supported the moves that they've made so far, and they've stayed right on cue so far. So I think we're looking to see if anything deviates from what they've said before in the past and give us a little insight to 2019.
Larry, we're looking at yields jumping right now. We're like 3.10 for the 10-year yield. Remember when, I don't know, back in February, everybody was freaking out when we hit 2.8 or 9? It's just stunning to me that we're looking at real concern here. But shouldn't we be taking this as the economy is looking healthier? We're back to normal after 10 years of fear and loathing.
Yes and no. Let's keep in mind that since May, we've seen Japanese and German 10-year yields rise by 20 basis points. That's definitely adding fuel to the fire. We have unemployment at 3.9, wage growth at 2.9. So what do you expect? I mean, I do think what's worrisome is the spreads between the yields. You know, the yield curve, we call it. You have like the 2-year, 30-year yield about 40 basis points. And if the Fed's really going to go through with 6 more hikes, which I can't believe, that's astonishing, but if they do, you're adding 1 to 1.5% to that, and that's going to surely cause a recession.
Does that, Larry, does that make stocks less attractive? The general thinking is, yeah, cash actually will start yielding a little bit more. The savers will be rewarded, but who in turn becomes the loser, Larry?
Yeah, you know, I'm sorry, great question. I think it's all dependent on why yields are going up, if it's the front end of the curve or the back end. If it's the back end, meaning the 10 or the 30-year yields, then that could be worrisome for the stocks. But the front end of the curve, that's a whole different animal.
Scott, you jump in here. What do you think?
I think the traders are looking towards Thursday's numbers beyond what we're going to hear tomorrow, but the economic reports that are coming out, which it's going to be a huge, huge day. GDP, consumer spending, home sales. I think that is going to give us and possibly even give the Fed a better outlook for December and beyond than what we see coming out of tomorrow. Liz, if we see any sort of slowdown, and recently we've seen some of these numbers, actually, they're still in that Goldilocks area, but they're not quite as aggressive as what we have seen. If we see any sort of slowdown, my big concern is that consumer confidence, consumer spending starts to tick down ahead of the holiday season. So I think traders and the Fed alike are all looking towards Thursday's economic reports.
Yeah, well, then there's the Apple iPhone indicator. If people have $1,000+ to buy an iPhone, we know the world is alive and kicking for at least the holiday season. Right. John, Larry, Scott, thank you. Too early to be talking about Christmas, please. All right, one major